Hey guys, let's begin. As usual, I like to start off with a quote from Elon Musk this time. AI will be the best or worst thing ever for humanity. Sounds a little hyperbolic, but if you listen to most people in the space, it's true. And I'll repeat this again later on, but I want you to understand like where we are right now. We are on a exponential curve, possibly. Up to this point in time, the curve has been exponential, but every exponential curve also turns out to be eventually an S curve. So right now we are here. The question is, are we going to be carrying on this curve or not? And we don't know that. The only way we'll know that is when things happen that we confirm where in the curve we are. What do I mean by that? I mean, we need to take cognizance of every new development in this space and see whether or not it goes along with some of the stuff we expected to happen in the past. Excuse me, a bit of a cold. If it does, then we can confirm that the curve is still going on. If, however, for instance, we see the next few models coming out are not as good an improvement as we saw in the past, if we see the next model, GPT-5 or Grok 3 coming out, and it's better, but not substantially better than GPT-4 and Grok 2, then you might argue that, no, we are no longer on this rising curve. In that scenario, you can make assumptions about whether or not that curve has changed or not. But up to this point, we have pretty much been on this curve. And in fact, we just had a release last week that kind of confirms that progress is still continuing quite strongly in this sector. So what we're going to do now is going to start off with a review of the last quarter. Okay. Hardware change sector, the software sector, and then also looking at portfolio changes as well at the end. Okay. The quarter in review. As you can see, we've had a very nice, year to date so far. We're up just about 18.5%. And this was as of the start of the week. So I'd done this presentation at the start of the week, and, obviously I'm doing it, now on Thursday. And in fact, I would say that considering the last couple of days' movements, we're probably a bit better than that. As an example, you'll see later on when I talk about companies like Tesla, Nvidia, Palantir, and so on, some of our big movers, we've actually done more, or significantly better than this start of the week, measurement. Some of these share prices are significantly higher right now on Thursday than they were on Monday, basically. And the reason being is quite simple. We've had this interest rate cut coming through from the US, and interest rates being lower are especially beneficial to companies that have future growth. Why? Because growth companies, those returns are happening in the future. So their profits are happening in the future, not right now. And whenever you have profits in the future, or any money in the future, you always have what's called a discount rate. The discount rate is how much do you discount the value of that money in the future versus money in your hand right now. 1,000 rands 100 years from now is worth less than 1,000 rands today. Okay, that's just a fact of like financial, mathematics. How much less is it worth than 1,000 rands today? Depends in part on the interest rate. The lower the interest rate, the more valuable future money is compared to current money. The interest rate fell by 0.5% in the US. So automatically, you're going to see that future dollars are going to be worth a little bit more relative to current dollars because of the fact that the interest rate has fallen. And the fact that we're going through a lower interest rate cycle is probably going to be very, very beneficial to AI companies and tech companies in general, because they're growth companies with these returns in the future. And that is going to translate into higher current stock valuations. So let's start with the hardware sector. Okay. Nvidia, chip manufacturer, demand remains strong. In fact, it remains so strong that Jensen Huang, the guy that runs Nvidia, was one of the interesting characters in tech space. He wears the same jacket all the time. He's a bit of a folksy kind of speaker. Always loves to mention the fact that he once was a busboy and used to clean toilets and stuff like that, and he's now one of the richest men in the world. He basically says that demand for Nvidia chips are so strong that he gets emotional about it. And that was confirmed recently by an interview with Larry Ellison, the guy that basically started Oracle. And he said basically he had a meeting with Jensen Huang, with Elon Musk. And basically what happened was they spent the entire meeting begging Jensen to take their money to give them chips because the supply is so short. NVIDIA has been by far the biggest winner in the AI space so far. In fact, even over the last 3 years, most of the revenue growth basically in the sector has been due to NVIDIA. In fact, if you take out NVIDIA from the sector, you wouldn't have revenue growth from 2021 till now. And in fact, 70% of other semiconductor manufacturers have seen falling revenue over that period, the last 3 years. However, when you have this much success, be aware that there is also going to be a negative part to it as well. And that is the fact that they are now possibly facing investigations about monopolies, etc. I don't think they have a monopoly. A monopoly requires you to basically, like for instance, with a monopoly, you can argue that Apple has a monopoly. And therefore, if it does some things on its app store, it's abusing monopoly power to do those things. What do you mean by that? Which is Apple wants to go out and overcharge or something in the App Store because it controls the Apple ecosystem that allows it to do things that harm the customer and benefit Apple. Okay, you can say Google has a monopoly in for instance advertising because of Google search and the ad service and so on. And you could argue that Google uses one service like ads to benefit another service like YouTube. However, I don't think there is that mechanism available to NVIDIA to abuse in the semiconductor space, at least not yet. So if it is a monopoly, exactly what the remedy for that monopoly would be is unknown. And the fifth thing I want to talk about is the fact that NVIDIA is using some of the money it's making, and it's making a lot of money at the moment because there's a huge profit margin. And it's actually investing in AI startups. And so NVIDIA remains a key part of our portfolio. And in fact, you'll see later on what the numbers I use to calculate that 18.4% return is. NVIDIA is up about 5.2% just today, okay? And you'll see how that number compares to the number we use to calculate that 18.4% return. And it's a little higher than that. So NVIDIA, key part of our portfolio, still invested heavily in it. And I think has worked out so far quite well for us. And I think it's going to remain a key part of the AI portfolio going forward. Next, AMD. AMD is kind of like the second in the field. Strange enough, run by Jensen Huang, the guy I mentioned that runs NVIDIA, run by his first cousin, Lisa Su. She runs AMD, Jensen Huang runs NVIDIA. First cousins running the two biggest chip companies in the world. It's a weird, coincidence. They are moving more towards AI. It kind of makes sense. If your main competitor is suddenly one of the most valuable companies in the world, making huge amounts of profits, and they're doing slightly different what you're doing, you're going to change your business plan. And so what they're doing is by focusing less on gaming and more on AI, they're hoping to get more into the lucrative AI space, which has been driving the growth that we've seen in NVIDIA. Currently, it's still significantly cheaper on a revenue basis than NVIDIA is. If you see how much revenue they don't make as much as NVIDIA, but the valuation is significantly lower than NVIDIA's, way more than you'd expect just based on the revenue they bring in. So it would indicate that there's probably an opportunity here relative to NVIDIA. And one aspect that they're looking at is opportunity in what's called inference. Remember, I've talked about this in the past. When you look at AI, there's firstly this massive training thing happening where you go and take a bunch of data, a bunch of computing power, run it for a long, long time, and then you basically get something out at the end that's a model that you can use on a smaller device and run it very quickly. The time you take it out and run it on a smaller device very quickly, that's the inference part of it. And as AI becomes more and more useful, inference is going to become more and more important. Why? Because that is where this thing is actually being used. Training is creating it. Inference is actually using it. And the demands for each of these kind of chipsets, the one that trains and the one that does inference, is very different. And I think that NVIDIA is kind of like doing really well in the training, and is also trying to get into the inference space as well. But I think there's more opportunity in the inference space than there is in the training space at the moment, anyway. And AMD could easily, make a play here that might not be as audacious as you think, because they're not trying to go after like, a far away massive leader in the training space. They're trying to go after maybe just a slight leader, or if that, in the inference space, where it's possible for them to make great inroads. And the thing to understand is that as AI becomes more and more useful, more and more popular, I fully expect that down the line, inference is going to be far more, a far larger sector than training. Because you're going to train something once, but the inference happens every single time you want to use it. And even though the amount of data, the amount of computing power you use when you infer is a fraction of the training data, or the training power, sorry, uh, because you do it so many more times, I think you're going to find, inference is going to be a big deal going forward. Okay, and in fact, that's we'll talk about it later as well. It's one of the reasons we chose our change in the portfolio. Intel. Unfortunately, this has not worked out well for us. We've owned this share pretty much from the start of the portfolio, and it's one of the few negative purchases we've had. It's up to date, and we've had some good news around it, but also some negative stuff around. Currently worse than 4% of NVIDIA's valuation. It's a very, very under pressure company. It's a company which used to be the far and away leader in the space. Intel used to be the dominant chip manufacturer. The older people would remember things like the Pentium, because the 386, the 486, etc. Computer chips that used to power PCs back in the day. NVIDIA, before the age of NVIDIA, before the age of AMD, there was Intel. It was the old dominant player in the chip space. They've kind of lost a lot in the last few years to NVIDIA and to AMD in terms of comparison, but they still have great technical expertise. They still have those smart people that know how to build these chips, and you would assume that over time they should be able to, kind of right the ship to a certain extent. And this is why I kind of have them as a doghouse in the chip race. They are basically there in the portfolio as a possible winner if, they come up with something that NVIDIA or AMD doesn't have, or they can do it just cheaper. Whatever they do, they can just do it cheaper, and that might be something that is an opportunity there as well. They've had some good and bad news recently. So they got a big deal from the Pentagon and AWS, Amazon Web Services, but they've lost out on the Sony PlayStation, the new version coming out. And that PlayStation loss is about 30 billion, which is almost half of the current, value of Intel. So it's a bit of a negativity there. But I do think that, like I said, great expertise, great history of doing stuff, and that expertise should not be gone just because of the fact that we've seen a bit of a downturn in the share price. And next in the chip space, we talk about ASML, which is another one of our holdings. This is the company that supplies the machines that are used to make the chips. The company makes the chips is actually called TSMC. And NVIDIA and those guys don't actually make these chips. They basically design them and send to TSMC to make them for them. ASML has really been hurt by China's sanctions. There's still a dominant force in the high end of chip making machines, almost monopoly, I would say there. But the fact that they can't sell to China is going to cut their revenue by about 20% by, I think, 2025 next year. So it's a big hit for them that they can't sell in China. But the good thing is that the reason that this is important is the fact that they are so far advanced compared to their competitors that this is actually the big bottleneck when it comes to China's AI sector. It's these ASML machines, because you just can't get a hold of them. And you can't get a hold of them, you've got to make your own local stuff. And it's such a high-end technical endeavor that this is the reason that China is lagging behind. And it's lagging behind by several years. I was saying to some guys in the office today, ASML has a virtual monopoly at the high end, but they've not yet been able to convert that monopoly into the super profits we see from places like, NVIDIA. But I still think that if you are in the AI sector, you've got to have this as part of your portfolio. Next, China. A couple of things in China, firstly the chips and then the models. China is years behind the US when it comes to chips, but the lead is shrinking. As many people have talked about, China has more educated people more smart, hardworking, educated people than any single country, other single country in the world. That's going to translate into the ability to do things that involve hard work and brain power. That includes building chips. If you devote resources towards it, there's no reason China can't get quite far down this line. And it's obvious that they are. The Chinese government understands the importance of AI, and they are pushing for local manufacturing. But manufacturing is difficult. It's going to take several years for them to get up to the point with which they can be on par, if not even ahead of what the US and its allies are doing. But they're definitely moving in that direction. However, they're having a lot of success with models. And the reason is quite simple. Often they just steal them. So, for instance, not steal them, but just use overseas models. For instance, Llama. When Llama is released, the Chinese are one of the first people out there that takes a hold of it and starts adapting it to their own needs. And if you don't have the ability to train your own, device systems, there's no problem with just basically using another system created by somebody else and just adapting it to your needs. One of the good things that they've done recently is video. So I don't know if you guys remember the Will Smith spaghetti video, where Will Smith is eating a piece of spaghetti or some spaghetti, and he looked really weird. The spaghetti was going through his face, his mouth was looking in a weird direction. You kind of recognize that was Will Smith because of the way the face looked. But you would never mistake that for a real video. A company called Kling, recently from China, released a video of a Chinese guy basically eating some spaghetti. And quite frankly, if you had not told me in advance that this was an AI video, I would have just thought it was a guy eating spaghetti. There was no dead giveaway like there was like a year ago with the Will Smith video. And I think that is something to be, obviously watched going forward. The Chinese are making some serious successes with these models, even though they not be able to train them themselves, at least for now. The one thing, like I said, to be concerned about China is the fact that a lot of the successes are tainted by sanction breaking. What I mean by that is that they are kind of skirting the international trade rules to get access to machines, get access to these LLMs, etc. And these are the things that are fueling their successes. So recently, when Huawei built a chip that was like considered to be very good, the question was whether or not it was entirely locally built, which would be very positive for China, means that they are basically out of the dependency on global infrastructure, or was it used building machines that were acquired kind of shadily? The argument is that they acquired ASML machines, but like behind the under the table kind of thing, and that allowed them to build these machines, all these chips rather. And if that is true, that's kind of true, but that is much less impressive than if they had built their own chip manufacturing machines locally and built these high-end chips. Because in the second case, that shows that they have the ability to basically insulate themselves from any kind of sanction from the West. And in fact, you would argue, in fact, that Western sanctions have actually done more harm than good with regards to the lead, because it just forced the Chinese to be more aggressive and more competent earlier than they would have been otherwise. Okay, and now moving on to sorry. Okay. Some hardware stuff that's not quite chips, but more to do with things like robots and cars, etc. On the 10th of October, we're going to get a big announcement from Tesla. And Tesla, by the way, another one of these companies that we own that has done really, really well today. Give me an idea. Just a second right now. Tesla is up about 6.5% today. Again, when you look at the questions and stuff coming through about some of these shares that we've had, just understand that some of these prices are significantly better than we are currently showing on this presentation. Okay. So Tesla, we're going to have an announcement coming through on the 10th of October regarding robotaxis. Robotaxis are the reason partially that Tesla is as valuable as it is. The other part would be their robot. As a pure car company, Tesla is far too small in terms of what it's manufacturing. And even if it was the world's #1 manufacturing, car manufacturing company, it will still probably be overpriced at the current level versus other car manufacturing companies, because Tesla is worth more than virtually every other car, major car manufacturing company combined. Like you add up Toyota, you add up Volkswagen, you add up Ford, you add up GM, you put them all together, and you pretty much have less than the valuation of Tesla is right now. That means that unless you expect Tesla to have more of a monopoly in the car sector than any other car company that currently exists, you have to have another reason to value Tesla as well as you do. And I think there is a reason, and one of the big reasons is the robotaxi. The robotaxi is basically, as the word indicates, a robot taxi. It would be a taxi that you would call without a driver, come to where you are, you get in, it takes you where you need to go without a driver, and then drops you off. That is the idea. Because of the way, of the cost of labor, etc., especially in the developed world, the majority of the cost of actually being transported by a taxi is the wages that is paid to the taxi driver. Not so much a problem in South Africa, but still, it probably would be cheaper, even in South Africa, to have a robo-taxi than to have a human-driven taxi. So on the 10th of October, we're going to get an announcement around this. Be aware that this announcement was supposed to come out in August, which was last month, and had to be delayed. Now, a couple of things. I don't think they're going to translate this immediately into a rollout. A couple of reasons why. Let's understand the idea of a robo-taxi and what happens there. You call a robo-taxi, you get into it, it takes you where you need to go without a driver, stops, you get out, blah, blah. What happens if you have a flat tire? Are you going to get out of the robo-taxi and repair it yourself? Is there going to be a robot in the back of the robo-taxi that gets out and repairs a flat tire? Unlikely. What needs to happen in that scenario, you need to have some company facility that overcomes this. Perhaps it would be roving, support for these taxis. Perhaps it would be, a replacement taxi coming. I don't know what exactly it would be, but you can understand that just having a bunch of self-driving cars doesn't immediately translate into a robo-taxi business, because cars break down. Cars have flats. Cars have whatever. In that scenario, if you are not the driver, but you are just a passenger, there's no guarantee that you know what to do and will be able to do the thing that will fix that vehicle. If a taxi has a flat tire, the taxi driver can get out and repair the tire. If the taxi breaks down, the taxi driver has the ability to basically find a way to get you to where you need to be otherwise. Calling somebody else to do it for you, etc. And then they will have the ability to also stick around with the current broken down taxi and wait for it to be picked up and repaired and so on. So I don't know just how quickly after the announcement that robot taxis are out, it'll be basically rolled out to the world. But I think that there's a couple more delays beyond just the ability to do self-driving in the robotaxi space that people may not be thinking about. Another thing with Tesla is that it's facing more competition, primarily from two areas. We talked about, the Chinese. The Chinese are really pushing ahead on robotics, and some of the Chinese robots are looking incredibly strong right now. And they also are pushing ahead on driverless vehicles. But even in driverless vehicles, there's a US company called Waymo that's already operating driverless or robotaxis in the US in certain cities. And they are basically already doing the thing that Tesla is only going to announce the kind of start of next month. Okay, so this is something to be aware of. I'm not going to go into detail about Elon Musk and some of the stuff he's done. Give me a second. I think somebody's asking a question. Let's see this. Okay, give me a second. Yeah, the question by Cleophas. I forgot your name, right, Cleophas? Asking, are robotaxis already in action or ready for operation? And I'm saying to you that, yes, other companies already have them out there. We talked about Waymo. China has them working in the city of Wuhan, which, if the name sounds familiar, that's where COVID came from. And they basically are currently account for about half in the last month. They looked at of all rides taken in Wuhan, taxi rides taken. This isn't quite the version you have in the US. It's more prescribed routes. It's a bit slower. They drive differently than like a normal human driver drives. But the cost is significantly lower. On the rideshare models that are using the driverless taxi, the highest cost in terms of like search pricing for driverless taxi is lower than the lowest cost for normal human drivers. So it's much more cost effective. And Waymo, like I said, already operating in US cities. And Waymo, if you don't know that, is a subsidiary of Alphabet, owns Google and so on. So this is a major US company, and they already are operating these robotic taxis, but they have a slightly different model than what Tesla has. Okay. So speaking of Waymo, currently running robotaxis, they actually have robotaxis on the road that you can order in certain cities in the US that are operating. They are also overcoming their some of the things that they have going against them. For instance, their distribution, they're looking at Uber, teaming up with Uber, and manufacturing. So they have also had discussions with Hyundai from South Korea and other car makers as well to produce these robotaxis for them. Now, the way Waymo operates is slightly different from the way Tesla operates. Tesla has come out with the idea that they don't need any special kind of sensors beyond a camera to operate a taxi. Why? The argument is human beings operate cars and vehicles by using their eyes. A camera replicates that. We don't have radar, we don't have echolocation, we don't have any kind of special powers beyond just our eyes that are required to operate the taxi. And therefore, that's proof that all that's needed to operate a vehicle is basically a set of eyes. And that's what their argument is. Waymo says maybe true, but we can make our lives easier if we had LiDAR, which is a kind of like laser radar. And they also use very, very accurate mapping of the area. So don't just say, oh, we get to a Waymo and it'll take you from like, Boston to Los Angeles or something. No, you have one that operates in a certain kind of area. And in that area, Waymo basically has mapped routes and roads and whatever to a point at which that vehicle can obviously, with the ability to make small adjustments, navigate that place very easily. And that is something to be looked at. On the one side, the one negative thing about Waymo is the fact that it's owned by Alphabet. Why do I say that? Because Google has a history of really getting things right technologically and really badly wrong commercially. Google invented AI effectively. The technology we use to currently run AI was invented by Google, but it's not the most valuable AI company out there. That kind of shows what the problem is. For the last several years, they've gotten a bit, old as a company, less willing to take risks. So if they have the visions that are able to do great things like DeepMind, which is the AI division in Google, they're not able to translate that over into products that they can send to customers because they're too kind of nervous about this kind of jumping from the prototypes and the concepts into wide rollout of things. And so it's possible that even though they're the first to run these robotaxis, they still don't have enough of a lead over Tesla. So that Tesla comes out with like more of a aggressive approach, they might actually still be able to catch up and overtake Waymo from the in the space. So yeah, that is sorry, give me a second here. Next, we're looking at models. So we looked at the hardware. Now we're looking at models. Models are basically the AI systems. Second. Okay, OpenAI. This is the big AI company, the first one that people learn about with things like DALL-E and GPT, etc., etc. So, what's important here is that in the last, say, as I speak to you right now, it happened last week, Friday. They released O1, preview version to paid customers for GPT. And the thing with the new version of GPT, or not GPT, but new versions to LLM that they've released, O1, is that it's smart enough right now in certain tasks that a normal human being doesn't have the ability to test how much smarter it is. What do I mean by that? So imagine that you are like tasting some food, and when things are really bad, you kind of like, are able to determine who's a good, a better chef than a bad chef, because the bad chef makes things that are unedible or inedible. But imagine the quality of the food just goes to a very high level. There's a couple of Michelin star chefs cooking for you. The normal human being is not going to be able to tell which Michelin star chef is better or not. They just don't have the expertise in the area to basically distinguish between a great chef A and a greater chef B. For both of them, they're going to say this food is great. Okay, and that's kind of the problem that they're coming to with OpenAI. Some people are saying that if GPT-5, GPT-4 was like a 98 or 100 IQ, model, O1 is more like a 120 to 130 IQ model. So one standard deviation plus, smarter than the average human. And therefore, the things that are going to basically trip it up are going to be the things that the average human would probably also get wrong. In fact, this thing is so smart, it outperforms human experts on PhD level problems. So imagine some person that's studying a field and been studying the field their entire lives, and now is like a PhD level, student, getting a degree, getting a master's, PhD, beyond that, going towards your doctorate. That person, on average, is outperformed by this particular model in the area of expertise. So if it's mathematics, this outperforms an average mathematics PhD level student. If it's physics, it outperforms the average PhD level student. You get my drift? And understand, if you are talking as a normal human being to an expert in the field of mathematics or physics or finance, and you were not yourself an expert in those areas, you would not have a chance of finding out whether what they're saying is right or not. Okay? Because they'll be able to do things that are just so much beyond your ability to understand it that you would not be able to basically distinguish between what's real and what's not. And that's the problem they have here. It's the fact that the model is obviously better, because when you look at people that know what they're doing and they're testing it in the ways that they would be able to see the difference between what this model is than GPT-4, say that this is significantly better. It's a massive jump up. But it's going to be hard for me to show you why it's better, because the majority of you are not experts in the AI field and will not be able to kind of like understand why this is better. But understand what we're going to see here is that O1 is an improvement over GPT-4 and a significant improvement of it. There's a couple of things to note here as well. Costs. So people are saying that the O1 costs many, many multiples what GPT-4 does. The reason being is that the way this operates is by having more reasoning, but it's going to take more time to think. So you'll do a question for O1 and it'll take like, say, 20 seconds to think about something and give an answer. That answer will generally be better than whatever GPT-4 would pop out in like a second or so. Because what this thing is doing a bit of recursion. That means it's thinking about things a bit longer. So that's good. And it kind of makes sense. Imagine if I had to ask you a question and you, one example had 1 second to answer, and the other one you had 2-3 days to think about it. Obviously, you'll do better generally with 2 or 3 days to think about something than to answer immediately, because the immediate answer is just off the top of your head, greater thinking, better reasoning, better ability to get a good result. So it kind of makes sense that if they are asking this model to think harder about something, and this does more like kind of cycles of thinking, that the result that it gets is better. But that also means that if it does more cycles of thinking, the cost of getting an answer goes up. So there's a question about how much it costs to operate, O1 versus GPT-4, and whether that cost differential is important. The next thing is that it is not GPT-5. The jump up here, which is significant between GPT-4 and O1, was not enough for OpenAI to call it GPT-5. So GPT-5 is still going to come out in a couple of months' time, probably after the US election, because GPT-5 is, if it's going to be as big a jump as we think between 4 and 5, it's going to make misinformation. It's going to make things like bots. It's going to make videos and pictures virtually impossible to handle with current methods and technology, etc. So this is not GPT-5. But the fact that they didn't label it GPT-5, but called it O1, indicates to me that GPT-5 is going to be significantly better than this. And in fact, they didn't want to disappoint the market by giving them something called GPT-5, because the difference, though it's impressive, is not as good as it's going to be down the line. Next, XAI. This is Elon Musk's AI company. They've raised about $6+ billion for I think it's 24 to 28 billion dollar valuation at the moment. And they come out with the newest model, which is Grok 2. Grok 1 was trained in almost no time. And it was interesting, but it was significantly below the top-end flagship model. So you see GPT-4, Claude, those kind of guys, Gemini, which is Alphabet's AI model. Claude is obviously Anthropic's AI model. GPT-1, so Grok 1 was, interesting, but not up to the same standard very easily. However, Grok 2, by most of the measures I've seen out there, is ranking up in the top 3 to 5 best models out there. So they're definitely at the same level as a Claude and a Gemini, and coming close to what GPT-4 was before the latest editions and so on. So they've gotten to a point very quickly where they are comparable to the best or state of the art in the area, at least until the release of O1. Why? Well, firstly, Elon Musk is really aggressive when it comes to building things. And he's less concerned about things like safety than other areas. By safety, I don't mean like people dying. I mean more like people like saying bad words, or the saying bad words, or doing like things that are not considered to be like good. So many people, when they first got access to Grok 2, made lots of images, for instance, of Kamala Harris and Donald Trump, dancing or kissing each other. And in fact, there's a famous one where both of them are in the cockpit of an airplane heading towards the Twin Towers and smiling and pointing to the camera. So this is a model that is not anywhere close to concerned about safety as, for instance, like a Gemini, which is Alphabet's model. You remember, Gemini basically was so concerned about things like racism that they actually removed the ability to choose a race for a character from the system. So if you asked it for like a picture of a Nazi, it could very easily show you a black female Nazi, because they don't want to be prejudiced in terms of what the outcome of a quote is based on race or gender. Okay, you see the difference. Grok is also very interesting because it might be a linkage to Twitter. If you have access to Twitter via an AI, and Twitter being what it is, or X what it is right now, which is still the one of the centers in which you can have new announcements, new news coming out, it's very, very attractive as an offering. If you can basically look at a model that's basically currently accessing Twitter and ask what's happening right now, and tells you some big news event happening in the world, it's probably going to be quite an attractive prospect. The one thing I want to put out there is the fact that this achievement of getting to this top flagship level, LLM level, has been incredible. XAI only recently started, its journey towards, doing AI, and it's been very, very fast, the ramp up. And in fact, Musk just recently announced that it's now built the most powerful supercomputer in the world. So from being nothing, just about a year or so ago, to being, up to the top 3 and having the world's most powerful supercomputer ever, that's quite a big jump up. Next, we have to talk about Alphabet, linkage to YouTube. So they are trying to basically monetize what they've created. So YouTube recently came out with some AI stuff. They also are the guys that own Waymo. They own Isomorphic Labs. They created Gnome. The thing with Google is that they are really good at creating, high-end science, but not as good as they should be at making money out of that thing. Virtually the only thing in Google that really makes money has been the search engine, and everything else has kind of been like a side event. Whether or not Google is going to be as serious about, really commercializing these things as they should be, is kind of like an unknown. But if they are, I think there's opportunity here at Google to do something. But if they're not, then you're not likely to get full value from these AI developments, because they'll create something like they did with Transformers, and somebody else is going to make the money off it. one thing to know about Google is, like, we talk about Alphabet, sorry, about NVIDIA and that monopoly accusation. That's like at the very early stages, and who knows how that's going to go. But for Alphabet, this is Google's parent, that is much further down the line. They've already been found guilty of monopoly behavior, and there is discussions about breaking up the company. You probably have a Waymo part of the company, you have a YouTube part of the company, you'd have an AdSense, a search engine part of the company. You might even have an Android part of the company. And I think the breakup, if it does happen for Google, though it may be traumatic in the short term, could possibly unlock more long-term value for the company than remaining part of this conglomerate. Because, if somebody's not being able to do AI stuff as well as they could because of fears around the search engine and advertising, I think that's probably being a bit of a holdback or being a bit of an impediment to getting the full value for that invention. And I think if it was broken up, with this concern about, for instance, from the AI division about search or about, anything else, it's possible that this is going to result in a greater ability to get the total value or just out of the value of the developments that Google does make. So that's actually a possible positive for you. Might be negative for Google in the short term, but I think longer term will probably be a big positive for the company. So next 3 to 6 months, this is what we think is going to happen the next little while. And I think that it's probably going to be one of the more eventful periods. So let's just look at what's going to be happening there. So Grok 3, GPT-5, and Claude, all pretty much in the next 6 months, possibly even in the next 3 months. So with that now is September, that means October, November, December, before the end of the year, we are likely to get at least one new model of the next generation. I suspect it's probably going to be GPT-5, because they've been training GPT-5 longer than, for instance, Musk will be training Grok 3 or Claude, next version, etc. And I do think that they are possibly delaying the launching of this for the election, because I think the US election, they don't want to get into the same kind of trouble that Facebook got in the last election with Cambridge Analytica, etc. I think they wanted to kind of avoid any kind of real danger there by just saying, before the election, we didn't have anything to do, or no new model to look at. So they're probably going to see something just after the election. We heard from Musk that he's expecting to release something either by the first quarter of next year or by the end of this year, which would be like, Grok 3. And this is the point at which we're going to get another reading on scaling. Scaling, remember, is the reason that we have been so optimistic with AI. It's so far been that you add more intelligence, more computing power, you add more data, you train it for a long time, and the more you do any of those things, the better the program at the end is going to be. If, however, the next Grok comes out or the next GPT model comes out, and it's not as much of an improvement as we expected, then we know that what we're dealing with is actually a phenomenon that's declining in terms of progress. And if it's declining, then maybe some of the assumptions we have for the future is not going to be as positive as we thought. So maybe some of the valuations are overdone, etc. But we would need to see that before we can make that assumption. Because so far, every single time we've done a reading, it's always shown that this is still an increasing scalability kind of situation. Okay. That's why what we know about scaling is that computing power definitely going through. Because of more money being spent, as well as improvements in technology, the next model is going to be trained with like 100 times more computing power. In some cases, more than the previous kind of models were trained. Next, algorithms are improving as well. How did you know that? When Sergey Brin did an interview, this is the former co-founder of Google, and he was saying, algorithms are definitely something that we have to be cognizant of. We are seeing an improvement in algorithms, according to Sergey Brin, that's bigger than the improvement in computing power. In fact, he's saying that a lot of the stuff that's been improving among AI things over the last little while is nothing to do with algorithms, computing power, but more to do with algorithms. And the next thing is data. Data, I think, is a serious bottleneck. We've already used all the words in the internet. And though people say that we could also use YouTube, if you actually look at all the words on YouTube, it's probably only going to be about 1/10 of the words already used by the models to train. That's previous, which is basically GPT-4, etc. So you might be able to add maybe another 10, 20, 30% to data, but maybe not going to add data up 10 times or get 10 times improvement in data. The next thing is that the data that's currently out there is in danger of being kind of polluted by AI data. What do I mean by that? If you're going to be training like new models out there, but a lot of the models are going to be training on writing that was done by another AI, it's possible that that's going to result in a bit of how can I say, a bit of a setback when it comes to progress. Okay. Next, looking at robots, I think robots are significantly down the line, probably in excess of 6 months, almost certainly. I think people want to get this done. I think some of the physical, blocks are there, but we're not at a point where we can trust a large metal moving thing in the house operating without a controller and still be like, guaranteed that the safety of people. So I would think that, I'd be surprised if robots took off within the next 6 months. And then self-driving, already discussed that. I think that's probably going to be launched by Tesla really soon. And Waymo, again, already doing it at the moment. So changes to the portfolio. The one thing we've added to the portfolio in the last little period has been CrowdStrike. Okay, why? The sell-off was overdone in my view. There was the example I used to illustrate this is a company called Wiz. It's also in security, and that was bid. There's a bid for Wiz for about $23 billion by Alphabet, like Google's parent company. Wiz turned it down. It said it was undervaluing it. And Wiz is like a startup. It's not an established company like CrowdStrike. And it's operating the same space that CrowdStrike is operating in. At the time I bought this particular, investment for you guys, CrowdStrike was worth less than $12 million. So less than $60 billion, $60 billion. So we're talking about something that's worth roughly just over 2.5 times what Wiz is worth, but much more established, much more, stronger revenue, etc., etc. I think that the sell-off due to that mix that they had overdone. I think CrowdStrike probably undervalued when we bought it, and we've done really well on that particular investment. In fact, even today, again, not to toot my own horn, but understand that just today, CrowdStrike is up 5.5%. Okay, and we were already up, double digits by the time we bought it, like less than a month ago. So let's look at portfolio performance. Here is what you guys have been looking for, what the portfolio holds currently, and what the profitability is. And again, I just want to make you guys aware that these prices are significantly below where the prices are today because of the way, for instance, NVIDIA. Current price in NVIDIA is actually $119, not $113. Okay. Current price on AMD is not 148. It's 158. Okay. The price on let's see, Meta is currently 556, and we have it down here at 537. Okay. Microsoft currently at 539. I have it here at 530. So lots of these prices up significantly. Tesla, the price I have here is 227. Current Tesla price is 243. Okay. Not to say everything is up for today, but the vast majority of these shares are up significantly today. Even Apple, which is a bit of a laggard, is at 229. We have to 220. And the one which is more thing I'll look at here is or CrowdStrike. We have it at 267. We talked about that just now. Added to our portfolio at 219, and current CrowdStrike price is 281. Okay, so even better than any of these numbers look. So I would suspect that if we had to look at the performance on this portfolio year to date at this point in time, we'd be significantly above 20% year to date in dollars for the portfolio. Now I'm looking at one more, alteration here. In fact, I will probably announce it in the next, weekly wrap. But we are, selling one of these things and putting a new thing in place there. And I'll explain to you why that is in the weekly wrap. But I'm not going to tell you guys right now because it's just a new decision that has been made. Now, in terms of the holdings so far, what's the philosophy behind what we are doing right now and like where are we going forward? Okay, so we still are heavily invested in the chip manufacturers. You can see with AMD, you could see with Intel. Intel, by the way, like I said, one of our big laggards. Current price, by the way, it's we bought it at 330 or 33, sorry. So it's been like our, up there with basically Baidu as the big losers we've had. So Intel right now is at 21.62, up about 4% today. Okay, so it is still negative, but we are actually improving from where we bought it. But Intel, it was ASML, Alibaba, AMD. That's not Alibaba. It was ASML, AMD, NVIDIA. We are still quite strongly invested in the chip manufacturers, and we still think that at least for the foreseeable future, these chip manufacturers are going to be one of the big recipients or the big beneficiaries of the AI rally. It's probably going to move more towards inference production the next few years, away from training, because you can't afford to just be training these tens of billions of dollars models and increasing like the size of these models every time by 100 times, and look much money you spend by 10 times. Eventually, you get to a point where you're training $1 trillion models and then looking to $10 trillion model after that. That's not a feasible future. So I think there'll be a bit of a slowdown in just the amount of money going towards some of these models. But once the models are created, there's going to be probably a massive ramp up in the amount of inference happening. Because once you create this, like say, a $20 billion model, you're going to probably spend maybe more than $20 billion on the data center that runs this model. You know what I mean? And I think that is the future for these companies. Beyond that, we still have exposure to China via Alphabet and via Alibaba and via ASML, via Baidu. As you can see, it's not best performing things out there. Alibaba is up at 1.3%. In terms of the price of Alibaba, just to be aware, we're not seeing the same kind of, improvement in Alibaba that we saw elsewhere, but we're still up about 3% on the day. So it's not 84.42, it's actually 85.70 at the moment. And with Baidu, it's currently sitting at about 85, 30, and we had it at about 80.65. So it's a bit better, but these are still our losing trades. Alibaba slightly positive, but Baidu is still losing, but we're still holding them because again, the Chinese are lagging in certain areas, but they're still outperforming in some other areas. And I think over the longer term, they are going to be able to catch up. CrowdStrike, I have there, I've obviously talked about the reasoning behind that. We have access to things like also eBay. Really worked out for us in terms of improvement, 51% return on eBay. I'm less convinced about its applicability to AI at the moment, and so we might be looking at that down the line. But it's worked out very well for us. We are keen on the drug makers, Novartis, as well as Eli Lilly. Got into them reasonably soon. Both are in the money, but I do think that there's much more growth potential there based on AI than there is for instance eBay, even though it's performed better. nice. We'll talk about that next time we meet. And what else? Palantir, Oracle, some of these downstream things that we think are going to be beneficial. And finally, I just want to say one thing about Apple. Uh, Apple has been performing well. It's like done 13%. And in fact, like I said, if you had to add on today's performance as well to that, you'll probably be seeing a performance closer to a second, probably closer to about say 14, say 14, say about say 17%. Still underperforming the overall index, but I do think that Apple really is a potential, strong, player in the AI sector. They generally are the company that waits until all the technological advancement has been made and then steps in and provides the best consumer experience. And I think with AI, we are getting to a point now where the technological advancement is not going to be as important as some of the consumer experiences that are going to be wrapping around it. And I think that Apple is probably the company that's best situated to take advantage of that. It's almost the opposite of Google. Google or Alphabet, which does all the tech stuff very well and doesn't quite get the consumer stuff well. I think Apple kind of is not so great on the actual tech stuff. I mean, people with Android phones know that almost any new, Apple innovation or invention was something that Android had, years ago. But when Apple gets it out, it's usually with a bit more polish, a bit more, pizzazz, and therefore consumers like it more. And I think we are entering that point in the next year or two where AI is going to get past that, initial kind of rough tech space. And I'm not going to say that it's not going to start to keep improving. I think it's still going to keep improving. I think the base model is going to be good enough to perform most of the needs that we have. And therefore, we're going to be using these AI models pretty much more universally. And then it's going to come down more to about who does the best kind of job of making the consumer experience better. Because, like I said, the example I hear with that chef, who knows if we're going to go from Michelin star 1 to Michelin star 2 to Michelin star 3, and then obviously 3 is the highest level. But I mean, AI it might go to Michelin star 100. I'm saying to you that Michelin star 1 to 2 chef is going to be good enough for the vast majority of people, and it's more about then what the restaurant feels like and what the consumer experience feels like than the quality of the food. And I think we are approaching with the next models out there a point at which the underlying technology of the AI program is going to be good enough to do a lot of the stuff you want it to do. In fact, most stuff you want it to do. And then what's really going to be the determinant of what one you're going to use is going to be, which gives you the better experience when you ask it questions and so on. And I think Apple has a history of being really good in that space. Okay, that's it for today. Do you guys have any questions? You can just pop it in either the Q&A or in the chat. Give me a second here. I'll see one coming through. Give me a second, sorry. Okay. Second. Oh, I got some questions. You said a lot of the focus is on Europe and on the US and China. What about Europe? For those that know my belief, I think Europe has, for whatever reason, just kind of dropped out of the tech race in effect. There's actually been an important realization by the grouping recently that they are falling behind, and in fact they appointed Mario Draghi, the former head of the ECB and former I think it was Italian Prime Minister, to come up with a solution. And so he went out and he looked at what's happening in Europe, and he came up with a solution. The kind of thing he says, clearly the US and China are going ahead technologically far beyond what Europe is. Europe needs to catch up. And what they need to do catch up is $800 billion, or 800 billion euros, rather, 800 billion euros, almost €1 trillion for more government intervention. So I don't think that's the way to go forward. I don't think it's going to be able to do that. I think seeing the performance of XAI with the Musk, seeing the performance of something like a startup like OpenAI, it's pretty clear that in these innovative spaces, it's far better to be a company that basically is free to operate than a company that may have a lot more resources, but is under restrictions in some way. And so, yeah, I think that is It's an important thing to keep in mind. Okay, anyone else with a question? Oh, cool. How do you invest? Pretty simple. Give us a call. The amount to invest remains about $20,000, slightly more than it right now. But because of the rand strengthening, is about the same amount of rands that was the past, but just about 400,000 rands, or just under 400,000 rands. And basically, what we would do is take money out of out of the country, open a stockbroker account in your name, and buy the shares that we have here in that stockbroker account. So just give us a call if you have 400,000 rands or so, free or more, and we'll be able to operate that for you. More. Oracle is seen as catching up with the AI race. What is it that would set Oracle apart in the next 6 to 12 months? Look, we have Oracle in the portfolio, done really well, 42%. The reason we have Oracle here is that it is not so much as a competitor to some of the other guys in the AI space. It's more of a way it can do things with AI that other people can't. What do I mean by that? Imagine you have access to a database, your company's database, which is usually run by a company like Oracle. And imagine you bring AI into that database, trusted, internally developed, internally trained, and allow that AI model to basically work on your own secure internal database, giving you answers to questions about things in your internal database. That's an incredible amount of productivity that can come from that. Imagine you have a factory, imagine Toyota. Toyota has a database operated by Oracle. I'm making this up. I don't know if they do or not. But you can imagine a company like Toyota having an Oracle database. Then imagine Oracle brings in an AI agent that you're able to, as a manager or a person in a Toyota, use to ask questions about your database and work with it. You can ask about supply chain. You can ask about sales. You can ask about trends. Oh, do you know that you can ask the database, hey, any kind of supplies that are in short supply, or this looks like there might be in short supply going forward? You go through, oh, this particular kind of screw seems to be, in short supply right now. Or we see this trend that this particular thing here is a bottleneck in your production, etc., etc. Oracle is not so much a competitor to like for instance, a Microsoft or to a Google. But I think that their business model can really benefit from AI. And like I said, because I think that next, say, 6 to 12 months, like you're talking about, we're going to get these new AI models that are going to be good enough to do like this kind of thing. We were talking about you have to do like, graduate level statistical analysis, good enough to do, PhD level analysis in some areas. That's going to be good enough to basically do some serious work on the majority of corporate decision-making things that we have out there. And Oracle, I think, is pretty well placed to bring those things into play in the modern environment. So they are able to basically translate a model created by Meta, which is Facebook, that Llama model, or Gemini or something, and get that model access to a database that it can basically kind of make bespoke for that database, so that the people that operate the company know, for instance, that it's trusted and it's more, likely to give an answer that they need, and also at the same time not going to send your stuff to like the wide world. Like if you use, for instance, a case of like the example given recently was that Samsung employees were using GPT-5 or GPT-4, sorry, to answer some stuff. Samsung basically is a competitor to Microsoft, and Microsoft is like the half owner of OpenAI. So effectively, Samsung was using Microsoft's AI and giving it confidential Samsung information. That doesn't work long term. However, I think Samsung is more than happy to use Oracle and give Oracle its information, because Oracle has a business model that's more about how corporates work, or more in line with how corporates work. So I hope that answers your question about Oracle. I think it's not so much about them catching up or doing a model. I think it's more about them having a different way to approach the space that could be really different from other stuff. That's one of the reasons, for instance, I chose a company like eBay, because I think there's an opportunity in eBay around AI that you will not see, for instance, at an Intel or a Meta or a Google or even an Amazon, and way that AI would benefit eBay in a different way than the other companies. Okay. So, okay. Any more questions? I can't see anybody ask anything at the moment. So if you want to, learn more or basically open an account, here are the, the operation procedures. Just email, it's called support at Ranswis, or go to our website, ranswis.com/account, and, start the process. If you email support, just mention the fact that you're interested in the AI portfolio and you want to basically, invest in it. We can do the whole process for you, all the way from getting your money from South Africa, overseas, opening the offshore account, and buying the shares, etc., etc. So, thanks for joining me. Anyone else? Any questions? Just make sure if I go off. A question about robot taxis in South Africa. Yeah, I don't think it's coming to South Africa anytime soon. I think because of the nature of our roads and our traffic system, quite frankly, as well as the disruption it's going to have on employment in South Africa, I think it's probably going to take a little longer to come here than it is elsewhere in the world. And understand what I mean by employment. The number one job in the world is driver. More people are drivers than any other job in the world. Self-driving vehicles replaces virtually all of these people. Truck drivers, ambulance drivers, taxi drivers, delivery people, forklift drivers, if you can put them in there. These are all replaced by self-driving vehicles. In a country like South Africa, that would make a huge impact in terms of employment. We were talking hundreds of thousands, maybe more than that, of people being unemployed. In the US, I think it's multiple millions of people unemployed. And that won't just be in the US, it'll be everywhere in the world, every single country in the world, virtually, that has a reasonable economy. The number one job of that country is driver. And I think that's going to be one of the more disruptive things out there. And we are like 6 months to like 12 months away from a big roll-up of self-driving. I think it's going to be one of the big negatives that we talked about in terms of AI. Like I said at the start, AI, big positives, big negatives, best thing ever, possibly worst thing ever. And the best thing ever is going to be, drugs and whatever. So the bad things are going to be losses of jobs, unemployment, inequality, and those kind of things, unfortunately. So yeah, okay. But I don't think how we can invest based on that in South Africa, unfortunately. Okay. Any other questions? Okay. Cheers, guys. Thanks for joining me. This stuff will be up on YouTube if you are interested. Ask me if you have any friends are interested. You can go look at that there as well. Okay. Cheers.